Today, I want to profile Jack Andrews. He's a 5-star Needham analyst on Wall Street, and I want to talk to you about two of the recent companies that he's given ratings for, and one of them has an almost 150% upside. So stick around. Hey guys, welcome back to the TipRanks YouTube channel. Thank you so much for joining me for another video. I'm Richard Allen. In this video, I want to talk to you about Jack Andrews. He's a 5-star Needham analyst on Wall Street, and he has a 66% success rate with his ratings with an average return of over 26%. And he's done ratings on both JFrog and C3AI recently. I want to talk to you about those two companies, and one of them, the last one, C3AI, he gave a rating of a 140% upside over the next 12 months. All right, let's jump right into this article. It says Needham bets big on these two tech stocks. Through the first half of this year, we've seen heavy volatility in the NASDAQ. At one point, the tech-heavy index even swung into correction territory. But since mid-May, there has seen a sustained gain on a steeper trend than the NASDAQ has seen recently. In fact, guys, if you're familiar, right, we've been talking about it for the last couple of weeks, the NASDAQ hit all-time highs along with the S&P 500, and the Dow is kind of close to all-time highs as well. But back to the article, it says, and some of the NASDAQ giants, dominant tech firms like Apple, Microsoft, Facebook have been sharing in those gains. It's a turnaround from conditions earlier this year when the tech giants led a retreat, a big retreat. Investors are moving back into growth-oriented tech stocks after a first half which saw bond yields rise slightly from historic lows and inflationary pressures increase. Stocks are bringing in the most reliable returns, and given the nature of our digital economy, tech stocks are a natural to lead the trend. It's a trend that has not gone unnoticed. 5-star analyst Jack Andrews, that's who we're going to profile in this video, has turned his gaze on the tech sector and found the potential for serious gains. So first, we're going to talk about JFrog. They just IPO'd in September last year, and they wanted to debut at like $33, $35, something like that. And they immediately went above $60 per share, just like we saw with Airbnb and DoorDash and Snowflake and all these IPOs. Like most IPOs last year just went absolutely bonkers. We saw it with Coinbase. And they've retreated slightly since then. So we'll talk about what JFrog does a little bit, guys, here. It's a software development company that has managed to differentiate itself from the competition in a truly unique way. It pioneered continuous updates, allowing software to update invisibly and non-intrusively, adding a new layer of convenience for the end user. JFrog has become the standard in automated release and update management. JFrog's products offered across the company's platform include software for repository management, security, DevOps, and distribution. And that only scratches the surface. The company has been in business for over a decade, guys, and now has a market cap of over $4 billion. It says, while JFrog, like many of its peers in the tech business, runs at a net loss each quarter, other financial indicators are highly positive. In its 3 reported quarters since going public, JFrog has shown quarterly revenues of $38.9 million, $42.7 million, and $45.1 million. The company's operating cash flow in quarter 1 was $8.8 million, of which $7.7 million was free cash flow. As of the end of quarter 1, JFrog had over $605 million in available cash, and a lot of that came from their IPO. In fact, it was about $352 million that came from their IPO. So a lot of that is available in cash there. On June 29th, JFrog announced that it had entered to acquire digital security company Vdoo. The move will bring Vdoo's continuous security capabilities to JFrog's platform for secure operations from development to device. The deal will be conducted in cash and stock and is worth an estimated $300 million. Needham's Andrews sees this move as a key to JFrog's near-term growth, saying of the acquisition and of JFrog, in our view, the acquisition delivers deep synergies that allow Frog's existing base to leverage more security features outside the upstream scope of CI/CD. Although Vdoo should have an immaterial impact in their near term and the product's potential uplift was not detailed, we believe the combined solution advances Frog's vision of liquid software delivery by removing security bottlenecks. Moreover, the growing convergence of dev, security, ops allows Frog to address a growing range of new personas and markets. So let's jump over and talk about what the analysts right now in general think about ticker symbol FROG. All right, so JFrog's coming in with a moderate buy based on 8 analyst ratings with an average upside of just over 28%. But let's jump down to what Jack Andrews thinks. He has a price target of $86 on JFrog, giving this an 86.7% upside. Big upside, and he just gave this rating 6 days ago. And we have also some new ratings as well. We have a $45 price target, and then no price target, just a buy rating from this guy here. What do you guys think about JFrog? Let me know down in the comments. Do you agree with Mr. Andrews here, or do you think it's more likely that we've seen some downside with JFrog, or do you think they're going to get back up to their debut IPO price or even higher? Let me know what you guys think of this company down in the comments. All right, let's move on to the second company we're going to talk about. It's C3 AI. And AI, guys, well, if AI, artificial intelligence, doesn't build their own robot bodies and take over the world, I will be disappointed. I just hope it doesn't happen anytime soon. But maybe, I don't know, maybe I want to be around to see it happen. You know, you see it in the movies and then you think, I wish that would happen. Nobody thinks that. I'm kidding. The second Needham pick here is C3 AI. It's another newly public firm, having held its IPO last December. C3 AI is, as its name says, an AI firm, providing a set of services and products for the building of enterprise-scaled applications. C3 AI software uses AI to improve efficiency, make customer and use apps customizable, and streamline the development process. The company's products are applicable to a range of uses, including customer engagement, fraud detection, supply chain optimization, and predictive maintenance. In its IPO, C3 AI put 15.5 million shares on the market, raised $651 million in gross proceeds. The stock was initially priced at $42 per share, but peaked at $112 its first day and closed at $95. So this thing took off first day, like crazy, even more so than JFrog did. While the stock has fallen in the past 6 months, the company still boasts a market cap of nearly $6.5 billion. The IPO set a high bar for C3 AI, and the company's most recent quarterly report for Q4 of fiscal year 2021, ending on April 30th, cleared it again. Quarterly revenues were up 26% year over year to $52.3 million, supported by a strong gain in subscription revenue, which rose 17% year over year to reach $43.1 million. For the company's fiscal year 2021, the results were equally positive. Full year revenue was a company's record, up 17% from 2020 and coming in at $183.2 million. Subscription revenues year-over-year gain of 16% was in line with the quarterly gain, and the full year subscription revenues were $157.4 million. The company finished the year with a total AI customer count of 89 for an 82% year-over-year gain. Looking at C3 AI, Jack Andrews sees the company in a strong position for the future. Here's what he had to say. Our key takeaway is that the momentum in the business appears to be accelerating. Expansion of strategic accounts continues, and AI progresses on scaling out its unique sales partnership model. Importantly, AI reported a substantial acceleration in forward-looking metrics like billings and adjusted RPO, which confirms our confidence in AI's ability to materially accelerate revenue in near to mid-term. We believe AI's unique solution, expansive total addressable market, and veteran leadership could lead to it becoming the default platform for enterprise AI. Pretty cool stuff. Let's check and see what the general analysts have to say about C3 AI. This comes in with a moderate buy based on 7 analyst ratings with an average upside of almost 68%. So there are a lot of people that are really excited about C3 AI in the near term. However, if we take a peek at the charts, right? So if C3 AI debuted at almost $120, right? They're trading at $60 now, right? So that's like a 50% drop from that peak. So it makes sense that people are really, really excited about this going forward. However, take a peek at this. Jack Andrews gives us a $146 price target with an almost 142% upside, 141% upside. And he just did that 18 days ago. All right, guys, that's it for these two companies. Let me know which one is your favorite down in the comments below. If you had some discretionary money, let's say you had $1,000, would you split it between these two companies? Would you put it all in C3 AI or JFrog? Do you believe in one over the other? These are both pretty cool tech plays that I think Jack Andrews has a pretty good feeling for these companies. Guys, let me know what you think down in the comments below. I would love to hear from you, and I'll see you in another video. Thanks.